Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
You know, the tax world never really sleeps, does it? And right now, it feels like it's in total overdrive. We've got a government shutdown that's left some huge questions just hanging in the air. The IRS is finally starting to catch up with crypto, and all the while, states are basically rewriting their own tax rules on the fly. So let's try to make some sense of all this chaos.
43 days. Just let that sink in. That's how long the federal government was recently shut down. I mean, that's a long time, and it had some real consequences for real people, from missed paychecks to major disruptions and all sorts of programs. But the big question really is, when the lights finally came back on, what actually happened?
Well, here's the thing. The deal that ended the shutdown, it was really more of a temporary patch than a permanent fix. It kind of just kicked the can down the road, leaving the biggest, most contentious issue completely unresolved. And that just sets the stage for the next big fight. So to really get what's at stake here, we've got to break it all down.
All right, so first up, we'll look at the shutdown and the political battle lines it created. Then we're going to dive deep into that healthcare tax credit fight. After that, we'll switch gears completely and talk about the IRS, crypto, and trusts. We'll do a quick tour of what's happening in the States, and then wrap it all up with your 3 key takeaways. Okay, so the shutdown's over, but the battle lines are definitely drawn. Look, the government is back open for business, but don't let that fool you. The deal they made, it's really more of a temporary truce than a full-on peace treaty. That main disagreement, the one over healthcare tax policy, it's still just simmering under the surface. You just know it's going to boil over again.
And of course, each side wasted absolutely no time framing the whole thing to their advantage. From the White House perspective, it was a picture of Democratic obstruction. President Trump accused them of, and I'm quoting here, trying to extort American taxpayers for hundreds of billions of dollars. And you know, that kind of language, it's not just your typical political talk. It was a pretty clear signal that they were not backing down.
Now, on the other side of the aisle, you had Democratic leadership with a totally different story. They framed it as a fight for the little guy, you know? They said they were trying to lower the cost of living and tackle what they called the Republican healthcare crisis. Their big push was to extend those key tax credits from the Affordable Care Act. So yeah, you've got 2 completely different realities being presented.
So what is this thing at the very heart of the standoff? Well, it all boils down to something called the Enhanced Premium Tax Credit, or PTC for short.
So what exactly is the PTC? Let's break it down. In the simplest terms, it's a subsidy. It's a tax credit specifically designed to help folks afford the health insurance they buy on the marketplaces. It came out of the Affordable Care Act, got expanded later on, and for millions of people, it's become this absolutely crucial piece of the healthcare affordability puzzle. And man, the divide on this is just stark. You've got Republicans like Senator Thune calling any extension a complete non-starter. Their argument is that it's basically just padding the pockets of insurance companies. Instead, they're pushing for other ideas like pre-funded health accounts. Then you've got the Democrats, and they are digging their heels in, saying no way to funding bills without this extension. They're even trying to force a vote on it. So yeah, not a lot of middle ground there. Okay, so while everyone in Congress was stuck in that stalemate, guess who was busy? The IRS. And they were tackling one of the trickiest, most complex areas in finance today. Crypto. They just dropped some brand new guidance, and believe me, it could have a huge impact on how digital assets are taxed. Now, to really get this, we've got to talk about staking. What is that? It's a really core idea in the crypto world. Basically, by locking up your digital assets, you're helping to keep the network secure and validate transactions. And for doing that, you get rewarded with more of that same asset. Think of it like earning interest in a savings account, but for the blockchain. It's the same idea, just with a high-tech twist. And this is the big news. The IRS just created what's called a safe harbor. So what's that? It's basically a new set of rules made to give investment trusts, think crypto ETFs, a crystal clear path. A path for them to stake their assets and share the rewards with investors, all without totally messing up their tax status. This is a huge step towards getting some real clarity in the crypto space. But there's a catch. There are some very specific hoops to jump through. To get into this safe harbor, a trust has to be publicly traded. It can only hold one single type of digital asset plus cash. It needs to use a professional custodian. And, this is a big one, it has to be insured against losses from something called slashing, which is basically a penalty if something goes wrong on the network. It's pretty clear what the IRS is doing here. They're trying to build a secure, regulated playground for these big crypto investments. All right, let's pull back from the federal level for a minute, because what happens in DC is really only half the story. All across the country, states, and even cities are constantly tweaking their own tax rules. It's happening everywhere. So let's do a quick rapid-fire tour, shall we? First stop, Pennsylvania. They're making a really interesting move when it comes to federal tax law. So Pennsylvania has basically decided to go its own way. The state passed a law to decouple its corporate tax code from some of the new federal rules. What does that mean? It means that while the feds are changing how businesses can write off things like R&D expenses and business interest, Pennsylvania is saying, nope, we're sticking with our old rule book. And if you're a business in PA, that means you've got a whole different set of tax math to do. Okay, let's jump over to the West Coast. Next up is Seattle, where voters just gave the green light to a pretty significant change in how the city taxes its local businesses. Yeah, this one is really fascinating. What Seattle's Proposition 2 does is kind of a two-for-one deal. On one hand, it's increasing the B&O tax rates for most businesses, but at the same time, it's massively raising the bar for who has to pay the tax in the first place. The threshold is jumping from $100,000 in gross receipts all the way up to $2 million. So what you end up with is a tax cut for a lot of smaller businesses and a tax hike for the bigger fish in the pond. And hey, the changes don't stop there. It's happening all over. In Missouri, a court ruling is totally shaking up sales tax exemptions. Over in Nebraska, their Supreme Court just changed the game for how rental properties are valued. Now they can use actual rent, not just market averages. And then there's California, where the state is literally sending out thousands of letters hunting for companies that aren't complying with unclaimed property laws. It's just a great reminder that this stuff is always in motion. Okay, so we've covered a lot of ground. What does it all mean? What are the big ideas you should walk away with? Let's boil it all down to 3 key takeaways. Okay, number 1, political gridlock isn't just background noise. It has real, actual tax consequences, and that fight over healthcare credits is the perfect proof. Number 2, innovation always outpaces regulation. I mean, the IRS is just now creating rules for crypto, which shows you just how much policy is playing catch-up with tech. And finally, number 3, always remember that your state and local tax codes are a constantly moving target. What happens in DC is just one piece of a much, much bigger puzzle. And that really leaves us with one big question to chew on, doesn't it? When you've got stalemates at the federal level, technology that's moving at light speed, and 50 different states all making up their own rules, is the whole idea of a stable, predictable tax code just a thing of the past? It's something to think about.